Hi friends, once again welcome to Rojeez Stock Market. In today's video, we are going to do the share analysis of Hindustan Unilever. Before that, if you haven't subscribed to our channel, please subscribe to our channel and make sure that you get all the regular updates by pressing the bell icon. Dear friends, this company belongs to FMCG sector, which is considered as evergreen sector. If you ask me what is the full form of FMCG, it comes as fast moving consumer goods, which includes home care, beauty, personal care, and refreshment segments, etc. The market cap of this company is around 5.5 crore, which is massive, and it is a large cap stock. Here you can see that in the comparison, Hindustan Unilever comes on the top. And if you look at the second largest company, just 46,268 crores, not even 10% of what this company have. Now you can imagine what is the difference between Hindustan Unilever and other FMCG companies. Now if you look at the 12 months return, it is around 13%, 5-year returns at 168%, and maximum returns, that is 22 years, comes around 1328%, which is not so great compared to many other market leader companies like Infosys, Britannia, many other companies. This appreciation is not the best in the market, but we must understand one thing, that this sector is recession proof. FMCG sector never falls. If you look at the chart, this sector never collapsed. It is consistently growing, right? So that is the advantage of having an evergreen stock in your portfolio. Now if you look at the stock P, it is at 68, which looks really high, but the industry average is above 50. So in that case, 68 is not too high. Now if you look at the ROE, it is 29.2%, which is really great. ROCE 39.2, ROA 18.4. They're all looking very good. Now if you look debt to equity is 0%, which means company has no debt at all. Now again, debt to profit is also 0%. Okay, here also you can see that ROCE at 39.2, ROE 29.2, return on assets ROA 18.4, and this thing dividend yield is just 1.3, and the book value at 203. The numbers are okay, more than enough. Going further, you can see that inventory turnover ratio is at 6.3, which I personally consider as very good, because 5 to 10 is considered as good, because inventory turnover means within how many times in a particular year the inventory is completely sold. That means the inventory is replaced how many times in a particular year. If the inventory turnover is 6, means all their goods in the stock is sold off within 2 months. If it is more than 6, means before 2 months the complete inventory is sold. This is one of the crucial thing to be checked when it comes to FMCG sector. Now if you look at the promoter holding, you can see it is 61.9%, and they have reduced it from 67.18 in the last year. And DIA and FI has invested significant amount, which means the company looks attractive. Now the best thing is the company has a reserves of 47,000 crores, increased from 8,000 crores in 2020 March, which I consider as very positive. Probably the reduced holdings may be converted into reserves. So here you can see the promoter holding is around 61.9%, and before it was 2020 March it was 67.18. FIIs have 14.95 and DIIs have 10.68% stake in this company. Now you can see that this company is making consistent profits. See, from 2010 to 2021 data available in this website, we can see that this company is making profits consistently, and the profits are increasing every year. Now the next thing to check is who is the driver of this company. The driver means the chairman and managing director. It is Mr. Sanjeev Mehta at age 59. The reason why I am particularly looking at the chairman is, if the driver of the company is not good, then the vehicle can crash at any point of time. Here this person has a qualification of chartered accountant. So he is a very good businessman. It can be clearly understand from his qualification. He has a CA degree. and he got it from Institute of Chartered Accountants of India. Now we can see that this company has 14 major brands, 85 years of heritage, 4,500 distributors, and this information can be found in annual report page 2, which is fourth in the PDF document. So well, let's go to the PDF document. You can clearly see that at page number 4, this information is available. So it has 4,500 distributors, 1,150 suppliers, 14 brands in the top 100 most trusted brands. There are other brands also, and you can see it has 85 years of heritage. If you want to look at the brands, you can see that in HUL website, this brand section, you will get all the information. And we found it like this. You can see there is Axe, Boost, CAF, Comfort, Dove, Horlicks. There are many different varieties of Horlicks, Junior Horlicks, Knorr, Lipton, Lifebuoy, Lux, and many more. There are 4 pages. I'm not going to everything, but you can just have a look at it. Sunlight, Wash. Now it all belongs to Hindustan Unilever. So we have seen all these brands in our life many times, right? And this all belongs to Hindustan Unilever. Now if we look at the subsidiary information of this company, we can find it annual report page 47, and it will come at the 26th of the PDF file. You can see Unilever India Exports Limited is a subsidiary of this company. Lakme Liver Private Limited is there. Hindustan Unilever Foundation is there. And going further, we can see that Unilever Nepal Limited is there. Unilever India Limited is there. And still it is not complete. There are other. Ponds Export Limited is there. Bhavishya Alliance Child Nutrition Initiatives. And there are other companies, you can see Liver Association Trust Limited and all. So on and so forth. Now another interesting information I got is, even though this company is located in Mumbai and headquartered in Mumbai, the major shareholder among the promoter is not an Indian company. It is Unilever PLC, which is a British company. Among promoters, you can see it is Unilever PLC has maximum stake. This company is London based, multinational consumer goods company headquartered in London. So even though this company is Indian, the Hindustan Unilever is Indian, but it has substantial stake by foreign companies. Now if you go into the technical part, you can see the 200 exponential moving average is bullish. This is the 200 exponential moving average line, the pink line. It is clearly staying below the price line, which means the chart looks bullish. And this 4813 exponential moving average, which is neutral. And you can see that the price is finding a support. These moving averages acting as support, which means it can rebound. Possibly it can rebound from here. And if you go to MACD, you can see MACD is in negative territory. You can see it's minus 4.23, but still it looks slightly bullish. However, stochastics doesn't give a clear indication it is neutral. RSI is also 51.46. It is also not giving a clear indication. Now you can see recently this company has announced dividend. The ex-date is June 14, that is today. Hence a small downward correction is possible in the coming days. The current price is also okay for long term. Better entry price is near or below 2300. Now we can see the next support levels at 2230 will be considered as the best entry point. But we don't have to wait for the best entry. The chart you can see at this point is considered as one of the best entries. Even though the chart looks bullish in the long run and neutral in the short term, still because of the dividend issue, there can be a small downward correction possible. Going forward, in my opinion, you should buy this share in small quantities, and the maximum long-term portfolio allocation should be 5%, which means if your total portfolio size is 1 lakh, then you should restrict the size up to 5,000 rupees, not more than that. The immediate target, which comes around 2,400, the medium term target comes around 2,600, which is all-time high, and the long-term target, which is around 2,800. If you like our video, please subscribe and like our channel. Now a small disclaimer, friends. The trade tips and suggestions made here is purely for educational purposes. Please consult with your financial advisor before you take trades based on my tips. Thank you for watching.